Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Friday, November 16th, 2012. Let's jump in and look at the S&Ps, the E-mini futures, and it looks like it's down, sideways, and down, and it's just being relentless. It finished in the middle of the candle on today's trade with a 14-point range. So we'll see on the tick chart that it was there was up and down all day long. But tomorrow's expiration day for options. So basically anything could happen. So you can see from the T1, 2, 3, and 4 are all below zero, and the light blue line on T5 just went below zero on starting the evening trade at 5 o'clock Central Time. So, or 3:30 Central Time. So, usually, it's my experience that once T5 starts going below zero, there could be a slight kickback rally. Now, tomorrow's expiration, there are a lot of people who have to cover their options positions, their stock positions, and we may actually see a short covering rally back up to the 233, which would be 1362. I don't know if that's going to happen. We could go straight down and hit 1333 or even 1330 on the 377 exponential moving average. So I'm not really sure where it's going to go first, but the 1330 is still the ultimate target. So it may take a hiccup and go up here first, at which point just keep your powder dry and let it make its run either to 233 or the 8-period moving, the 8 EMA at 1367, or even this trend line at 1371. But if there is a short covering rally, it's going to be fairly vicious, and so just if you're on the short side, just keep your powder dry until it comes up to this area. And if you start seeing it go up just slightly in the morning, if it goes up here tomorrow, it may not go up here till Tuesday, Monday, Tuesday, but it's kind of in the cards for this to start rallying a little bit, because you can see it's been going down steadily since October 18th, except for this little bell curve here and then straight down. So don't be surprised. Okay, I usually use the 1597 or the 4181 tick charts on the S&P. But you can see from the 1597, this hash market is the beginning of the day at 8:30. It was really slow enough in trading that it didn't really catch the highs and the lows. So I had to drop back, and the 987 wasn't any better. So I had to drop back to the 610 tick chart on the S&Ps, and that worked out really well. So at right about 8 o'clock this morning, it launched from the settle price of yesterday at 1351, and then you can see the T1 matches up. Most of the crossovers of the whole day match up with very close to the highs and lows. So this matches up here. This matches up at 901 for a rally of 1350 up to 1357. And then it kind of dribbles down, dribbles down, dribbles down. It starts going a little bit sideways here. And so when it starts going sideways, you just don't get it until you see a clean break to the upside. So you don't know which way these are going to move. So you have to drop down to the T4 down here, which is a beautiful break to the upside, which if you caught at a little bit off the lows, about 1347, it was a ride all the way up to where this hash mark came down. So You can either take it up here or take half off at the 377, and then just keep trailing your stop, or just use the T1 to get out. And then again, on the way down, T2 brought you down here, and again, T2 got you covered and got you long. So overall, it was, and down again at, if you were playing the close at 14:57. I'm sorry, at 2:57 Central Time. So overall, it was kind of tricky to trade it, but there were some good moves on the waves that you could have taken advantage of. Okay, Goldman Sachs is officially, as of today, all of T1 is below zero, and all the rest of them are heading down slightly. If the long wave on T5 goes below zero, then all these other ones are going to follow. So my target on Goldman is about 4 points away at 111, and 50% retracement of the move from back in July is, let me see here, is 109 to 10, and 618 is 104. So let's just tighten that up and then get rid of these. And so right in this area here, 107, 104, right where this increase in activity, daily activity took place. So when you're playing it on the, now for right now, on the 21 minute, it's sometimes it's good. Let me find a better chart for that. Oh, that's much better. Okay, so for Goldman, these are nice moves that you can catch off of the 610 tick chart, and just like T2 goes above zero here, and you wouldn't want to play it to the upside, but you can cover short positions. You don't know if this is going to go sideways or up. As it happened, it went up 3 points to 118. But then, because the daily is descending and T1 was below zero, then all these moves are playable to the downside, including like this. This is not very clean. It's kind of jumpy, but the clean one is T2 at 116.66. And it brought you down to 114. So small moves, but if you're playing them, if you're playing options in the money at, like a 70 delta, then you'll be doing fine. You get 3/4 of a move. You get 3/4 of a point for every point move in the option. I'm sorry, 3/4 of a move on the 3/4 of a point move on the option for every point on the stock. All right, Baidu took a little break in the action today. It was up slightly against the, and it had very little movement, but it's taken a major hit from 103 down to 91, and you can see all the waves are now below zero. So this stock is going down. Let me see if there's another tagline here. Let me just get a little more. Let me get a little more data here. See if we can find something. Actually, that's about the last line I used. Wow, I really can't tell where Baidu is going. It should kick up a little bit. Oh, here we go. This is a weekly chart, but data just goes back to, the waves don't fill in well because they need a lot of daily candlestick data, and since they're open for trading in 2006, there's not a lot of data. But on the cash price, it's right about at the 233 of 88, which was my original target about 2 months ago, and I kept waiting and waiting and waiting, and it didn't happen until the last couple of weeks. So I would expect some kind of a bounce off of off of 90, and it hit a low of 93 today. Let's put that back to the daily. On the tick chart, you can see here that on the 610 tick chart, this is like a 3-day chart. You can see a nice clean break to the upside on November 14th. That was good for, let me see, from 92 to 95, counter trend trade. But now it's below zero on T1, just starting on T2. So it may pop a little bit. If it does happen to pop to 97, it's definitely re-shortable. And actually even 96, 97, somewhere in this area. All right, Apple is getting closer and closer to my target of 516. It's happening actually much more quickly than I thought it was going to. At the 377, you see once it broke 233, it took about, at 566, it took about 5 days to get down here. So it's happening very, very quickly, but I do expect some kind of a bounce off of the 377. Now, on the 21-minute, it went below zero again on yesterday's trade, and continued flow through. It was down 11 points, but at one point it was down 14. So you can see that T5 is below zero completely. On any kind of a market rally, it's shortable once again. Google keeps trickling down here. T3 is now below zero. T4 is like 1 or 2 days from starting to be below zero. And the best, these are a little bit, the 21's a little bit more difficult to read on the on the waves. So I was experimenting and found that the 144 tick chart works really, really well for Google. And you can see this happened on November 9th, and these are all, a 144 tick chart on the S&P obviously is about, this whole screen is about 2 hours worth. But on Google, because it's slower trading, it happens to be like 7 days worth. So nice clean entries right here on T4 at 654 all the way up to the 377 and beyond. And then on the downside on November 13th from the 377 down to where it presently is now. So from a 20-point move. So basically you ignore these small minor waves and you go for the big ones. All right, we're going to take a look at Amazon lastly. Kind of short video tonight. Amazon, I think I had Amazon on a 610. Here we go. Okay, so Amazon is on the 610. It goes below zero on November 7th, and it's basically the longer, and then it followed through on T5, and they're both below zero. And if you were following the shorter ones, then you take this down here, you cover, it went actually sideways to down, and then you're back in at 225 down to 218. So on the long side, I'm looking at Amazon already broke its 233 here on the left, and it's taken out the lows from October, and it's kind of blue skied all the way down to 211. There's basically nothing to stop this down to 211, which is the 230, which is the 377, where it hit a low in August. Let's take another quick look at Apple here. And let's see what the C wave didn't look that hot on Apple. Let me see, 987. If you're using the ABC waves, hang on a second. If you're using the ABC waves on Apple, I would either use a 987 tick chart, or you can use a 5-minute chart. Since these are counter trend trades when it moves above zero, because the long wave is below zero and the daily is below zero. But you can definitely use the C wave here as a counter trend move, or just as a way of getting out. So this took you down here under zero at 752. I mean 572. You cover here, and you're back in yesterday on Wednesday, right around 540. And as far as the waves are concerned, you are still in it, unless you're using A wave or B wave to cover. But if you're in December options, or you're just short the stock, then according to the C wave, you're still back in. Okay, that's all I have for tonight. Good luck trading, and I will see you at the next update. Have a great weekend.